the base criteria, it's a variable. So what else will be? Strong reaction, V-shape. If price creates a strong reaction and V-shape on the 50-minute zone, that will be another criteria, but we already know this. So that's why I told you that this isn't new. This isn't new for anyone. Everything have been told in the webinars recaps, but I'm just assembling everything together and creating this plan for you. So V-shape. V-shape is another criteria that you can have. What is V-shape? There's a zone, price mitigates the zone, creates a strong reversal, basically a V-shape reversal. This is a V-shape, simple. Okay, what other criteria could be there for a zone? Price isn't coming from opposite-sided zone. Okay, so if price, for example, we have the less recent supply zone up here, and price doesn't mitigate this supply zone when it's coming for our entry point at this demand zone. Sorry, let me just use. Okay, let me just draw the whole thing once again with arrows. It will be cleaner. Okay, so here's the supply. Here was the demand mitigation, not supply, demand, and here's the 1 minute character changing demand zone. Okay, so sorry. So if price doesn't come from an opposite side, unmitigated zone, so for example, from this supply zone, and it comes to your entry point without tapping into any opposite sided zone, this will be another criteria. This will be another variable criteria that you can adapt to your trade. Another criteria, liquidity to target. Okay, what is liquidity to target? Liquidity to target is a really, really strong criteria that you can have. If you have liquidity to target for a trade, chilling markets, please just wait. Liquidity to target. What could be liquidity to target? For example, if price creates 50-minute double taps right here, just above the 50-minute supply zone. If price creates 50-minute double taps right here, about this 50-minute supply zone, this will be a really, really strong liquidity to target, and you can actually target this zone or the liquidity right here. Or if price creates liquidity, for example, it creates a 1 minute structure down. So this is how the 1 minute structure will look like, right? So if price creates liquidity on the 1 minute structure somewhere around here, and that's how price is being taps this zone, so leaving liquidity behind right here, then you'll be able to target this liquidity too. Even though it's a 1 minute liquidity, you'll be able to target this liquidity. You'll be able to call like 1 to 10 risk reward ratio at this trade, for example, or if you're targeting the higher time frame liquidity to take, that will be 1 to 15, 1 to 20 risk reward ratio. So yeah, liquidity to take is a really, really, really strong criteria. You can actually add up to your base criteria. So this is another variable criteria, liquidity to target. What could be another type criteria? Corrective pullback, strong pro move. Okay, what is this? So if price creates strong pro movements, so the bullish movements are strong, and the 15-minute movements, so the pullback movements, so the bearish movements are slow liquidity building movements, this will be another criteria. This is another criteria because basically you're following the pro trend, and the pro trend movements are showing impulsive movements, and the counter trend movements are showing low impact, slow, not really strong movements. This is another criteria, but this goes on for the 15-minute and the 1 minute structure too. So for example, if here's this 15-minute demand zone, this 15-minute demand zone is being tapped with slow movements, slow bearish movements, and after a tap, it creates a nice inefficient movement to the upside, the trend will be continued. So this is another criteria that you can add up to your variables. So this will be another criteria, strong pro trend movements, slow, steady counter trend movements. Okay, let's see another variable criteria, which will be the 50% zone mitigation. I believe it's pretty obvious what we call a 50% zone mitigation. This is a 50% zone mitigation. If price mitigates the 50% of the 5-minute/50-minute zone, this will be another criteria for you. I believe it's pretty obvious. It doesn't need really further explanation. Okay, last criteria is combined liquidation. Basically, the base criteria has one liquidation, right? It has one liquidation, which will be, as I told you, the 50-minute zone liquidation here, or the liquidity build up here for the 1 minute zone. This could be 1 and 1 liquidation. But you can count up 2 criteria if both of the liquidations happen. So if price sweeps liquidity into the higher time frame zone, that will be 1 liquidation. And if price creates liquidity for the 1 minute character changing zone and sweeps this liquidity, that will be the second liquidation. So if you can see both of the liquidations on your screen, that will be a combined criteria, and that will worth 2 criteria. So once again, you can count up 11 criteria. And for a good, strong pro trend trade, you need 6, 7 criteria, but I'm personally using 7, 8, or 9 criteria for a good pro trend trade. If I'm seeing 7, 8, 9 criteria on my screen for a pro trend trade, I'm just pulling the trigger. And once again, you have to have these 4 criteria. Okay, liquidation. I'm not using liquidation 100% of the time, but mainly, as I said, I'm using it 90% of the times. So liquidation is basically a base criteria for me and could be a base criteria for you too. After, I'm just explaining once again the whole progress. After these 4 criteria are being appeared on your screen, so you can see these 4 criteria on your screen, you can add up your variable criteria. And as soon as your variable criteria reaches 7, 8, 9, or 6, 7, it will be customized for you. As soon as it reaches 6, 7, 8, 9 criteria, whichever criteria needs for you, you can actually enter. You can enter in the market. But after all of these criteria, I mean, choosing from all of these criteria appears on your screen. So for your own personal criteria appears on your screen. I will explain my best trade. I will explain my best probability trade that I take every single time later. But let me just ask, does it make sense? Here's the yes, no. Does it make sense? Is it all understandable? Okay, it is, but I'm going to explain it once again. I'm going to explain it once again. So you have to have these 4 criteria just to search for entries. If you don't have these 4 criteria, you're not going to search for entries. Okay, if you don't see these 4 criteria on your screen, or 3, because the liquidation is a 90% criteria here, it's for me. This criteria is for me, but I recommend you to use it too. So if you don't see these 4 criteria on your screen, you don't search for an entry opportunity. If you see these 4 criteria on your screen, you start to search for an entry opportunity. Okay, if you see these 4 criteria on your screen, you add up your variable criteria. After you add up your variable criteria and your variable criteria reach, for example, 7 or 8 criteria in total, you can actually enter in the market. Okay, if you have 5 criteria, if you have, I will write it, I will delete the 6 from here and I will write 7 or 8 criteria. So if you have 5 criteria, if you have 4 criteria, if you have 7 criteria, 6 criteria, you're not going to enter. As soon as your criteria reaches 7 or 8 or 9, you're going to enter. That's it. That's it. That's it for the pro trend plan. That's easy. Okay. Backtest each criteria and gather data about each entry type. After you've gathered enough data, you'll be able to assemble your own working trusted criteria for a pro trend trade. Okay, let me just explain this. For example, you're going to have data of 100 trades. From those 100 trades, 40 trades have the exact same criteria. So, okay, for example, you're going to have, for example, 100 trades. Okay, from these 100 trades, 40 trades are going to have the exact same criteria. So 40 trades are going to have 9 criteria, the exact same 9 criteria. For example, higher time frame zone, liquidation, inefficiency, pro trend. On the top of these 4 breaks criteria, you're going to have the entry type, of course, 5th, for example, strong reaction, 6th, liquidity target, 7th, 50% zone mitigation, 8th, and combined liquidation, 9th. From these 40 trades, all of these 9 criteria can be found. So all of the 40 trades have these 9 criteria. Okay, so from these 40 trades, 30 are going to hit your TP and work out perfectly, meaning you're going to have 75% win rate on these 9 criteria. On these 9 criteria, you're going to have 75% win rate. Okay, you're going to backtest another 40 trades, and for example, these another 40 trades have 8 or 7 different criteria. Another 40 trades have 8 or 7 different criteria, right? From these 8 or 7 different but same criteria, these 8 or 7 criteria are different from the 9, but these are the same on all of the 40 trades. Okay, so on these another 40 trades, you're going to have 37.5% win rate. So which criteria are you going to use? The 9 criteria, right? You're going to use these 9 criteria for every single entry. If these 9 criteria appears on your screen, you're good to go. You're going to execute it because you know that these 9 criteria have 75% win rate. If you see these 7 or 8 criteria, you're going to hesitate a little bit because these 7 and 8 criteria are going to have 37 win rate. So you're going to execute the 8 criteria trade, and every time it appears on your screen, you're going to pull the trigger repeatedly without hesitation. You're going to pull it if all of these 9 criteria appears on your screen. That's what I took the day before yesterday, right? All of the 9 or 10 criteria appeared on my screen that I need for a trade, and I took a loss. It's okay, because I know that those trades, in my case, for example, those trades have around 81% win rate. For my statistics, those criteria that I just used the day before yesterday for my trade have 81% win rate. So I just repetitively kept executing those 10 criteria. Why? Because my statistics shows that these have really high chance to actually work out. So that's why I said yesterday that you're going to backtest a lot. You have to backtest a lot. You have to backtest your criteria. Without backtesting, you won't be able to assemble your own working edge with your own working criteria. But here's the help. I gave you the help. Here's the help. You know the base criteria. You know the variable criteria. You can actually start to backtest these criteria. And it's not a recommendation. It's a must-have. You have to backtest these criteria in order to assemble a good plan. Without backtesting these criteria, you'll be still losing. You'll be still executing bad trades. You have to backtest these and gather data about these trades. Okay, question. Will you take my advice and will you backtest these criteria? It's important, really fucking important. Okay, you will. Lucas. Okay, then you won't. It's your own personal choice. Thank you, guys. I will remove your drawings. Remove it, please, everyone. Okay, perfect. Perfect. So these are the ProTrend criteria. Let's see here's the ProTrend concatenation plan. I just left it out. So concatenation is our third entry type, right? But this can be only used in a ProTrend. Concatenation can only be used in a ProTrend trade. All of the concatenation entry scenarios are being explained in the May 4th webinar. So all of the concatenation scenarios are being explained in this webinar. I'm not going to explain it once again. I'm not going to explain everything around those concatenation scenarios because I did explain this in this webinar for 30 minutes straight. I explained every single concatenation scenario that you can see on your screen for 30 minutes straight. Okay, with every liquidity creation example, with every concatenation, with every confirmation, with everything. I just explained everything in this webinar that how you can execute concatenations. So please, just watch that webinar. I'm not going to actually write it down in this plan because if this plan is being leaked, then everything will get that information. But this webinar can be leaked. So please just watch that webinar and take notes because everything have been being explained in that webinar about the concatenations. So that's enough about the concatenations. You don't need any other information. Just this video. Just watch this video and take your notes. Grab a handbook, grab a pen, grab a pencil, and take notes about this concatenation video. Okay, so let's just take a look at the counter trend trading plan model. But sorry, one more note. That concatenation trades have actually less probability than for example these reversal, change of character / flip trades. So these trades with these base criteria and with these variable criteria have the highest probability to play out. Okay, so these trades have the highest probability to play out. Concatenations have less probability to play out, but you have to know the concatenation scenarios too. And those concatenation scenarios are being explained in this webinar. So yeah, that's about the concatenations. Let's just continue. Counter trend trading plan model. Okay. So what do we consider as a counter trend? This is once again a really important part because lots of you guys doesn't even know what a counter trend or pro trend is. Let me just drink a sip. Sorry. Okay. So what do we consider a counter trend? First one, if the 4-hour is bullish and the 50-minute is bullish. In this scenario, if you're executing 1-minute charts, that will be the extreme counter trend. So if the 50-minute is bullish, 4-hour is bullish, executing 1-minute shorts are extremely counter trend trades. The same goes on vice versa. 4-hour bearish, 50-minute bearish, and executing 1-minute longs are considered as extremely counter trend trades. And I don't recommend these two scenarios. I don't even recommend for you to trade in these two scenarios. So don't trade these kind of counter trend trades. These are really, really bad, low probability shit setups. You will lose on these setups. You can backtest it, you can get your data, but all of the data will show that you're going to have a 10% or 20% rate on these trades. Shit, bad, shitty trades. You can't execute these trades. Or you can, it depends on your own risk tolerance, it depends on your own plan, but I'm not executing these kind of trades. Okay. Third and fourth, if the 4 hour is bullish and the 50-minute is bearish. If the 4 hour is bullish and the 50-minute is bearish, executing 1 minute longs are solid counter trend trades. Okay. So the 4 hour is bullish, 50-minute is bearish. These are being considered as counter trend trades. So 4 hour is bullish, 50-minute is bearish. This is the 4 hour. This leg is the 4 hour, and this is the 50-minute pullback of the 4 hour. So in this case, executing the 1 minute longs. So for example, price reacts on some sort of demand zone here, but let me just throw more structure. So the 50-minute is clearly bearish, but price reacts on some sort of demand zone here and creates a change of characters, strong change of character. We will talk about the criteria. Creates a strong change of character here to the upside. In this scenario, this is a solid counter trend trade with all of the variable criteria. This will be a solid counter trend trade because you will be able to take this trade up to the next recent unmitigated supply zone or to 1-to-5 risk-reward ratio. But basically, this movement will be 1-to-5, 1-to-6, 1-to-7 risk-reward ratio. So this is a solid counter trend trade. And of course, this goes on for the vice versa. So if the 4 hour is bearish, 50-minute is bullish. Goes on the same like this. And this will be a solid counter trend trade. Mainly, I'm executing these kind of counter trend trades. Okay. Fourth, 4 hour is bearish, 50-minute is bullish. As I told you, it's vice versa the same. In this scenario, 1 minute shorts are being considered as solid counter trend trades, and these have higher chance to play out, targeting the 50-minute demand zone in this case, or 1-to-5 risk-reward ratio. But we will talk about the exit criteria later. Okay, so let's see the counter trend plan. Of course, after we identify the trend, we can actually search for base criteria. Here are the base criteria for a counter trend trade. Higher time frame zone tap. Cancellations can be traded in a counter trend. Cancellations can't be traded, mainly because, let me just show you. This is the 4 hour bullish. This is the 50-minute bearish. So the 50-minute main trend is bearish and the 4 hour main trend is bullish. Okay, so why can't you trade cancellations in a counter trend trade? Simply because if price tap this 50-minute zone and, for example, changes character here, strong change of character. So this will be a strong change of character, as I showed you earlier. Changes character here and taps this 1 minute zone. And it comes up to this 50-minute supply zone. This may be your target point or 1-to-5 somewhere around here, right? But if price breaks above this supply zone and creates a demand zone and confirms this demand zone, this will be a continuation trade, but this won't be a counter trend trade. Why?